Welcome to my weekly review. Today is Saturday, November 22, the date on which JFK was assassinated some 63 years ago. It was 62. Yeah, 62 years ago. A very somber day. And we have a very somber stock market as you can see the index has sliced its moving averages. You can see the 10 and the 21 now trading, undercutting the 50 here as a trend. Short-term trend is lower, longer-term trend is still higher. I just wanted to point out here, well, a couple things. Nasdaq was up 195 points. Friday, 0.88%, closed at 22,273. We've had a 9% correction from 24,019 to from the peak on October 29th to the trough on Friday, which was 22 what was it, 280 something, 290 something? Oh, 21,898. 21,898. So that's a 9% correction. And I just want to point out, Peter Lynch is one a trader, investor that I follow, read his books and, really admire his work over the many years at his Magellan Fund. But, he talks about having a bear market, one bear market every 3 to 5 years. You can anticipate that. And we've had four in the last 7 years. So I can't believe we're having another bear market here, but we could. As Lisa Sue said, things are happening so much faster in the world these days, and we see it in the stock market. We had a bear market in the end of 2018 when they were jousting, Powell and Trump were jousting over interest rates. Powell finally acquiesced on December 24th and gave us a Christmas present. We had a bear market on the COVID, the COVID crash. We had a bear market, 37% drawdown in 2022 when Powell was raising interest rates. We had the tariff tantrum at the beginning of this year, which was a 27% drawdown in the Nasdaq. So we've had four. I can't believe we're going to have two in 1 year, but you got to keep an open mind. And you got to be able to adjust both ways. If this market decides to have a V-shaped rally, you make the adjustments. If it decides to crash and burn, well, you make the adjustments there. I just want to point out, though, on the weekly chart, the Nasdaq did come down to its 20-week line here and found support on Friday. If I could get this tracker here, you could see that it traded down to its 20-week line, 22,049. I just told you what the low is, 21 and whatever it was, 20, 21,898 right there. So it came down to it, undercut it a little bit, bounced, closed above it. Um, you know, I'm not going to be a doomsayer or anything. I'm just going to take it one day at a time. There has been, quite a bit of selling and distribution here on the Nasdaq recently, and you could see in the month of November, it's down 6%. I told you it was a 9% peak to trough correction thus far, but you could see it was up 7 months in a row, 62% rally, and now we've given back 9%. I don't know if that's enough of a correction, enough time. The market corrects via time and price. I don't know if it's enough time or enough price or enough pain, but if I could play an intro song, I would be playing taps on some of these stocks here because I look at leading stocks. I don't really, I like to have the tailwinds from the index when I'm trading, and it's obviously going against us now. But some of these stocks have really sold off hard. When the Nasdaq corrects 9%, your growth stocks are going to correct, 2 to 3 times that, 18, 25% would be kind of normal. And that's what we're seeing. I'm going to play taps. And the thing is, you hear about these Fed governors talking about rate cuts, and it really gyrates the market. When when jawbones it down and as a hawk, the market goes down. And when, one of the Fed members say, oh, we're going to have a rate cut, and he's a dovish, then the market goes up. So it's very much Fed dependent, and I think if you get interest rate cuts, maybe it's party on, Garth, and we just rally to new highs. But you just got to wait for that day. In December, I think the market does want rate cuts, but I just take it one day at a time. And right now, the index being this far below 2.7% is the index below the 21 and the 50. You can see that right there. So this is no time to get step on the gas or get frisky. I would much rather be short than long as the trend is lower for now, and it could change on Monday. So just take it one day at a time. Keep an open mind, be flexible. I do want to get to some of the um, earnings reports from last week, just briefly. Home Depot reported, not a great report. The stock sold off sharply here on Tuesday, I think it was. And, it stands to reason, the consumers kind of tightening their belts here, and they're not going to be spending a lot of money on their homes. Target's been a mess for a while. They're getting their lunch eaten by Walmart and Costco. Speaking of Walmart, they reported, talked about the K economy, where the higher end consumers are doing better than the lower end. We've known that for a long time. Couple of surprises here a little bit. Lowe's, they had the same sales growth as Home Depot, but this stock reacted better because it's all about expectations. And then some of the retailers did pretty well. Ross stores. Man, gapped up, had a big move. And a lot of the retailers have been hammered. This one is not. This one looks pretty good. Raw stores, yippee-ki-yay. Yeah, nice move there, breaking out of a base, power from the pivot. So you got to like that move from Raw stores, even in this, correction phase. And then Gap. Another retailer that reported had a nice response, still consolidating in a base here, but man, 8% move on Friday. So yeah, I'm just acknowledging those reports. And another company reported last week, NVIDIA, not a great response to their report at all. This was a 5 trillion market cap. Right now it's 4.3. So it's yeah, more than almost 16% off the highs. This one closed below its 10-week line, and it closed below its 20-week line, which is, essentially the 100-day, which I just pointed out where the Nasdaq got support. This one's underneath it, so it's kind of underperforming here. 15% off the high, yeah, underperforming the index. Am I saying that Nvidia is done? I don't know. It sliced those moving averages with volume, and yeah, I mean, it went from 5 trillion to 4.3. Yeah, that 212 could be the high in the NVIDIA. And, for all intents and purposes, I could say that, that 24019 could be the high in the NASDAQ. You have to keep an open mind here that we could be heading into a more deeper correction here. So just trying to keep an open mind here. And NVIDIA, I know there's a lot of folks who own NVIDIA and think it's going to be, you hear these folks talking about the early innings of the AI revolution. Well, you got to just keep an open mind. NVIDIA's been a monster for a long, long, long time. And these things do not grow to the skies. And it wouldn't surprise me to see this one fall back even more. So there's some ripple effects from the NVIDIA report. AMD, closed below its 50 here. And they said positive things 2 weeks ago, and then it's just sold off every day. Look at this. 4, 5, 6, 7 days in a row. Just it's it's in a free fall. And it was down, yeah, 17.5% last week. I took it off my leading stock list. Any stock below the 50, I want nothing to do with. So yeah, hard times for AMD. Broadcom sliced its 50 as well. Doesn't look as damaging as NVIDIA or AMD, but it's still 12% off of its highs. It is above its 20-week line here and a tick below 1.3% below its 10-week line. So this is not looking good in the semiconductor group. Another name that, sliced its, I think it's 10 and 20. Yeah, it definitely is Palantir. 12, 13% essentially below the 10-week line, 8.7% below the 20. When the market corrects, it re-rates these stocks. And when you have a company that's got a market cap of 367 billion with, 5 billion in sales, I mean, what is it, like 250 times sales or whatever? I mean, this is one of the poster stocks for being overvalued. So if he wants to re-rate these stocks, there's a bunch of other stocks that I'm going to get to here that I think are going to be, I guess you'd call them great shorts if the market's going to re-rate these stocks. So I wouldn't want to be long in this one. It looks like it wants to go lower. It's got momentum to the downside. You see those short-term moving averages crossing above the longer-term moving averages is in a clear downtrend. I want no part of that. Robinhood, same thing. Not quite as overvalued as Palantir. That thing is gross. A bloated pig, as they say. 96 billion market cap. Yeah, they're doing, I don't know, 5 billion in sales. So, this is 20 times sales as well. So, it's great when the market's going up and the multiples are expanding, but the market's looking out. It looks out 6, 9 months ahead, looking out to 2026. May not be liking what it's seeing here. The short-term moving average is crossing below the long-term. Clear downtrend. I want no part of this stuff. CLS, great stock for a long time, but now it's below its 50. It looks to me like that 363.40 is the high here, and these things are, been powerhouses for a long time. You can say, well, it's just a short-term correction. It's going to rally back. It closed right at its 10-week line. That could be the case. That could very well be. I don't want to be Mr. Doom and Gloom. I always think you got to, think positive and be positive because over the long term, the indexes do trade higher. And these corrections have been bought up. The dips have been bought. It's just we don't know how long they're going to dip and how low they're going to go. So just a lot of these names here. CrowdStrike, I took this one off my leading stock list as well. It's below 3.6 below the 10-week line here, down on 9%. That's a lot of pain. I don't like pain. Yeah, I'm going to avoid all this pain here. I would rather skip a rally than participate in a downtrend. That's just my position in life, basically. At my age, I don't want to sit through these, so I don't. A couple of other names highly talked about on Twitter. This one's in a free fall. Yeah, 45% off of its high. We know that stocks that go more than 40, you have a harder time making new highs. 40% off their highs. So I don't like this direction for IREN. Iris Energy was great on the upside, 5 to 76. Who doesn't like that? But on the downside, you want no part of it. And you can see these shorter term moving averages trending below the longer term moving averages. So this is just stuff to stay away from. I'm not saying anything bad. Nothing changed with the stories on any of these, right? Um, nothing has changed, but they're just kind of like re-rating and repricing these things. And I just got to get out of the way. I don't want any part of this. They're, like I say, I'm a front runner. I'm a trend trader. They're great on the way up. But when that trend breaks, you got to get out. A lot of damage here, below the 21, bounced off the 50, couldn't make a new high and it made it to 134, then sliced all of its moving averages. And you could see the 10 and the 21 have been below the 50 for a while now. So this one's in a clear downtrend, want no part of that either. That's a NBIS. I could do this all day. I'm not going to. I'm going to get to the junk, the real junk that I want to see re-rated, that I think was a sign of just too much froth in the market. And this is Quantum Scape, no sales to speak of. But it had a huge market cap here. It was over a 10 billion market cap not long ago. It's now 40% off of its high. So, yeah, these things were just frothy. Rigetti, same thing. No sales. CEO says they're not going to have any sales. He's selling all his stock. There's no reason to own this thing. There's no reason why this thing was at 58. Still has a 7.5 billion market cap, 7.6. This one was like 15, 16 billion market cap with no sales. So get the froth out of the market and throw out all this junk. This one was down yeah, 60% off of its high. It's going lower, I believe. IONQ, more junk. Not much sales here. You got what, 60 million in sales with the market cap of 17 billion. No, thank you. These things need to be re-rated. There's your earnings line heading total south. So yeah, this is good for the market, I believe. The problem is that everything else gets thrown out. The baby with the bathwater. euphemism or whatever you want to call it. Uh, I hate that term because I like babies, but this is another one, not much in their way of sales, less than 20 million in sales with an 18 billion market cap. No, thank you. That has a long way to go down. I know people argue that, it's all about the future and it's going to be a big grower. Well, when it starts behaving better, then maybe we can buy them. But for now, adios, muchachos. You just use the 21 is your guide. Once it goes below the 21, it's bye-bye. Every stock that I'm looking at here that sliced the 21, sliced the 50, not, a few days or weeks later. So, don't try to be a hero. Don't be the cowboy. Just let these things settle down. And if they want to, I know Rocket Lab's going to have launches and they're going to make money and blah blah blah. But for now, it's still way overvalued. 21.5 billion market cap for, a pittance in sales. So anyway, I'm off that soapbox. I want to get to something more positive. I've been way too negative this morning, and that's the drugs. Take more drugs. I'm going to start with Eli Lilly because I think that's the king of your drug stocks here. you know, there's been one area that's been really strong during this downtrend, and it's been the drug stocks. And I think eventually they're going to sell these. Eventually, this could go on for, weeks or even months, but eventually these are going to get hit too, because in a downtrend, they get them all eventually. But Eli Lilly has just been on a roll here, breaking out of this, long consolidation. So a lot of the drug stocks have been consolidating for a long, 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 long time. And I should go to XBI, but you could see the breakout here with volume. Lilly, this is, institutions are buying this thing. Here's the XBI. It went sideways forever and ever. Yeah, you can see this long time, and now it's starting to get some love here. You can see these, what is this, 5 or 6 months of big blue volume bars. So the XBI is getting some love. Lilly, to me, is the stock to own in this group, the big leader. There are others, though, that are doing well. Biogen is doing well, making new highs, breaking out of a base, and Johnson and Johnson, which is, one of those dividend aristocrats, medical diversified, because they have other products. But yeah, up 4% last week while the Nasdaq was floundering. So Johnson and Johnson looks good. I like the more speculative names, the ones that are like younger, smaller, leaner and meaner, just starting to grow, going from losing money to making money. This is Viridian Therapeutics, man, just super strong name. PTCT, and I'm not going to pretend that I know what all these companies do because I don't. I just know they're going higher and they're making their shareholders money. And then ARQT, I do know that they just had a topical cream for dermatology, yeah, skin cream, approved by the FDA. And this thing's been up a couple weeks in a row here sharply. Yeah, there you go. Made this big move, then pulled back, 25% move. 2 weeks ago it was up 3%. Last week, a nice 18% move. Arcutis Biotherapeutics. What other ones are we looking at here? Oh, Celcuity has been a super strong name as well. I like that one. IMNM having a readout here. It said it's the end of the back half of 2025 or the end of 2025. We're in the back half of Q4 of 2025, so they could have that readout at any time. And I think if this phase three, I believe it's phase three readout goes well, this thing could, make a sharp move higher. I'm betting that it will. We'll see. INSM, INSMED, another one that's just been ripping along, rallied up above 210 on Thursday at 208, pulled back, closed a little below 200, having a little teeter-totter action around 200. It did that with 100 back here, and then it, once it cleared 100, it was off to the races. We'll see what it does with 200. Super strong name. Just a lot of these CSTL. You should have a pencil and a piece of paper, write these down. They're working Castle Biosciences, dermatology, cancers, I guess. TNGX, another biotech name, and this is like the only game in town here. Trading, on Friday above that 970, trigger, with decent volume here. Let's take a look at the weekly here, up, 23% last week, breaking out above that level. So you can do the tango and actually make some money while you're dancing. And this is another one, AZTA, up 17% last week. You can see it's still consolidating in the base. What's in the box? Well, this one's still in its box. So, if I was going to put any stocks on my ready list next week, which I probably won't, except for short index plays, unless I see something. I've had a hard time trying to find stocks the last 3 or 4 weeks, and that's been telling me that the market is not healthy. ADPT, another one, adaptive, making new highs, undercut the 50, rallied back through, up 14% on Friday, up 32% last week alone. Adaptive, very strong name. Who else do we have here? Oh, some of the bigger names too. Merck doing its thing here, up 5% last week. This is another one of these, dividend payers breaking out of a base, making new highs. And Jazz had news last week, a phase 3 trial that went well, obviously, as the stock spiked on, was it Monday or Tuesday? I think it was Monday. Was it the Friday before? The 17th. Okay, so that was Monday. 21% move, followed through with a 6% move. Now just kind of flagging here. Jazz looks pretty decent. And then one that I like is ASTA. Um, this is the silicone, body shaping implants. Just finding support at the 10 and bouncing here. So that's kind of rare in this market. And then AXSM, this is one that's turning, from losing money to starting to make money. They have a hell of a pipeline, Axom, and yeah, this is, you could see all these weeks in a row, powering higher, up 7% last week. Wow, it's up to 149 now. Good for Axom shareholders. Anyway, I think I'm going to quit with the drugs. Enough drugs. Another group that's doing really well is the gold. They've been doing well all year. Anglo Gold is one that I like. Very few sectors are holding up here. This is one, Anglo Gold, the gold stock. Yeah, it was up 0.5% last week while the Nasdaq was down. What did I say? Nearly 3%. And just a couple other names in the gold stocks. I go through these every week. People are tired of them. AEM, this one sliced its 50 last week. That's not good. Yeah, down 5%. Franco Nevada, down 3%. HMY, 3%. And DRD, this has been one of the stronger names, and it's been down 5%. Consolidating in a base here. Let's take a look at this one on the daily. Yeah, just kind of consolidating. Not bad. So that is one of your stronger groups. It looks horrible. Another stronger group is Micron. Pulled back to its 50, undercut it a little bit on Friday, then rallied back up. This one. Yeah, there's a 10-week line there that it's holding up 202. It's a 10-week, yeah, down 16% last week. These things really took a hit because they were up a lot, right? So there's lots of profits to be had here. SanDisk down 21% after making that high. You can see how tightly it traded. Tight trading, support at the moving average. Then it got a little wide and loose. You can see how those those daily bars, the range went from, like, I don't know, $10 to $30 and then crapped out. So, will it find support? I don't know. We just have to wait and see. Still, well above its 10-week line. So it has a long way to fall. You see it's there, 166. So, watching SanDisk still, and then the mothership is Western Digital, pulled back to its 50. Yeah, these things had tough weeks last week. Yeah, down 12%. So more bad news. One thing I was looking at though, if we are going to get lower interest rates, is the home builders. That these things were set up nicely, and now they've kind of fallen out of favor. This one is pulled back to its 40 week. Oh boy, 200 day. but it bounced on Friday. I'm just pointing out, the support on Friday, the bounce. This one's well below everything. Builder first source. Pulte Home, another home builder. Yeah, bouncing off the 200 there. And then Lennar, just pointing it out, folks. Home builders. And then the last group, which energy, we need energy. This is one of the top groups, and Bloom Energy, nothing, the story didn't change with Bloom Energy. Nothing changed. But it went from 147 down to 67 on, excuse me, 76 on Friday. So they're just selling these stocks. Like I said, throwing the baby out with the bathwater. We do need all the energy we can get, all forms of energy. Down 20% last week, 39% off the high. And like I said, the story hasn't changed. GEV, they won some contract, was announced on Friday. Didn't help the stock. Still consolidating within a base here. To me, this doesn't look too bad. It doesn't look great. And you could see the sell volume recently. And then CEG had news as well. Deal with the government still, flat on the week. Even that news couldn't, prop up the stock. It was, one of the leading groups, and it should be. We need energy, but they're just selling indiscriminately right now, and that's just the way it goes. Take it one day at a time, like I say. Anyway, thank you for watching my weekly review at mcstockcharts.com. We never give up. In honor of the great Steve Jobs, Homestead High, Steve Jobs. We have earnings next week on Monday after the close. Symbotic, this robot company, Zoom, which I'm doing this video on, reports. And then on Tuesday morning, we get Baba and a couple others, retailers, Abercrombie and Fitch, Kohl's. Wow, these things are dying. Whew, that one looks rough. And then BBY, which maybe get some love for Christmas. Christmas is coming up. Maybe somebody will spend some money and prop these things up. Dell reports after the close on Tuesday, Zscaler as well. And on Wednesday morning, we get John Deere. So something to look forward to. We have Thanksgiving week this week, short week, 3.5 days. Thursday's off. Friday's a real quiet session. I know this is usually a bullish week, but November's supposed to be bullish too. And it certainly hasn't been after 7 months of, rallying. The Nasdaq's down more than 6% this month. Yeah, 2.74% last week. Like I said, it pulled back to the 20-week line there, which is really the 100 days. 20 weeks is 100 days. Found support. So that's one area of solace after these 3 weeks of selling after making that high on the 29th of 24019. So we just take it one day at a time. There's things to be thankful for and to be positive about. And there's also, things that you have to recognize and acknowledge that, there's some weakness here and we want to protect our capital and not give back our gains from, this big rally here from our Liberation Day, that 62% rally. Don't give that back, please. Thank you for watching at mcstockcharts.com. We never give up. Have a great weekend.